Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week. And a look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. Well, October turned out to be the worst month that we have seen for the stock market since 2011. The S&P 500 moved down 6.9% for the month. We had been looking for weakness during this period, and it turns out that overall the U.S. stock market lost close to $2 trillion for the month. And that was even after a surge that came right at the end of the month, with the FANG stocks having their best day in about 3 years. The rally did look like it was stalling on Friday as Apple's earnings came out Thursday night, and the indexes all sold off as Apple's guidance was not great. Late that evening on Thursday night, there was a report that came out that the president had ordered his cabinet to create a deal to present to China Xi on the trade war. Later on, that was denied, however, but in the meantime, we had a big reversal to the upside on the indexes on that news, which brought the S&P 500 from significantly lower up to some $20 plus, to the plus side. Then when that news was denied, the market started to sell off on Friday morning. So Friday does turn out to be a day when the market has stalled after what was a very good midweek, Tuesday, Wednesday, and Thursday. Other things in the background, tech stocks, e-com stocks, they pulled the market really in both directions during the week. As at the very beginning of the week, Amazon fell very hard, and that broke the NASDAQ. Then in the middle of the week, Facebook reported, and the market liked that, and we got a rally on that day. And then, of course, here Apple weighs on the market significantly on Friday. And other factors that moved the market was progress on Brexit, as they have reached a deal for financial services that moves it closer. That moved the British pound up. Following that, of course, was the euro, and that sent the dollar to the downside. And that was good timing based on what we were looking for, because we thought the dollar was ready to move down. And of course, when that happens, especially on a big down day like Thursday brought, gold then moves to the upside, which is inverse to the dollar, and we believe that there is something coming here in the gold market. We have talked about that now for a number of weeks. Also, energy stocks energy stocks were strong as the market rebounded, but energy itself was weak, and oil moved down and could barely find an uptick at all, as it just has extended throughout the week to the downside. I don't know about the close yet, because we're still around midday here on Friday, but it looks like 5 red days now for the oil market. So despite the strong rebound for the stock market, which came from extremely oversold conditions in a lot of stocks, to us it's very unlikely that the stock market has seen the bottom of this correction. It's common for any declining market phase of any significance for the bulls to fight back. They see prices are cheap, they see that there may be an opportunity, and they know that for 9 years the market sold off and came bouncing right back up. So they take advantage of it, and we get, up days, and some of them are pretty significant. But what happens is when the market stalls again, as we saw here on Friday, the sellers do come back, and sometimes they come back with a real vengeance, and you end up getting lower lows. In other words, the market keeps tracking on the downside. What helps define a bottom is when the rally comes and then it moves down again, but it doesn't make a new low. We haven't had that happen yet, and maybe the rally that we just had will do that. We'll pull back and test the bottom or not make a new low, and then we'll move up, and under that condition, we'll know that the bottom has been seen. But right now, intermediate patterns still suggest sharply lower for the stock market. And we actually think that, as we see happening today on Friday, that the market could move down in a way that the selling gets very ugly again. And that could happen actually pretty soon. And we actually still point to lows coming in the market sometime in the mid-late November period. So to us, there's still a lot of time left to go. Let's take a look at the 60-minute chart of the S&P 500 so you can see what happened this week. You will note that in there is a very interesting rising wedge. You can see as the wedge, highlight the top of it right there, and the bottom of it right there, and that is a wedge that you could see broke down on Friday. So just on a technical basis, you can see it was really rising all week until Friday when that denial came out. The selling then did resume. You can go back here to Monday and you'll be able to see what happened during the week. Here you got a rally here on early Monday morning as the Eurozone started to rebound. They got helped by Italy, which got a downgrade, not getting downgraded to junk. And China actually said that they're going to cut their tax on autos by 50%, and the auto stocks started to fly. And auto stocks benefited also from good earnings report later from General Motors. But then Amazon started to get hammered, and the NASDAQ led a decline, and you can see it was really a throwaway day late until there was that rebound at the very last hour on Monday. So that was the low for the week that was made on Monday. There was some news that came out overnight that the Eurozone was slowing from Italy issues, and the growth was the slowest in 4 years. And the Chinese yuan, which has been on the weak side, made a 10-year low, and that had the Chinese stocks a little softer. But then when the market opened, it got very choppy, huge swings in there. And we thought this would be a big swinging week, and you can see that. You got a big tech bounce here on Wednesday when Facebook came out with good earnings, and General Motors earnings were really strong, and that helped the market rally. But then late in the day on Wednesday, you got that decline right there. And on Thursday overnight, the dollar fell very sharply, and the pound and the euro jumped on that news of the Eurozone UK deal on financial services, and the dollar really started to move down, gold move up over $20 on that day. And on Thursday, you see stocks were strong basically all day. They really did not have any kind of an uptick because they were all looking for Apple to do what it often does, report good earnings, and that optimism kept the buyers coming in. Then there was a gap down here as Apple reported the weak guidance, and then overnight came that report on Trump, and the false report on Trump asking his cabinet to come up with a deal for China. Then we got the payroll numbers came out. They were much stronger than expected, up 250,000, and wages are jumping, which is what you would expect to happen now, as the Fed has falsely created a sense of things being better, and people got hired, and now they have to pay more money to get labor, and this is, of course, in my opinion, all on the Fed. And this decline that you see as it broke down underneath that rising wedge was on that denial of the deal. So a interesting week that we see there. Really sorry for that. All of a sudden my screen went blank, so I'm sorry for that. Okay, so that is the 60-minute chart for the S&P 500. And for the week, for the stock market, it is a rising week as we were looking for a small upside week. And that saw the stock market have gains of over 1%. If you look at the S&P 500 and the NASDAQ, Dow Jones Industrial Average closer to 2%, and the Russell closer to 3% on the upside, as these were strong gains. As far as the bond market goes, it was pretty much steady on the downside all week long as the safety bid went away with the stock market getting better. That had the 30-year down some 2 points on the downside and had 10-year yields popping by 12 basis points. We kind of reversed what we had going on in the previous week. The dollar, as we said, rolled over on that big down day on Thursday. After being strongly to the upside earlier in the week, it only gained about 0.2%, and we think that the dollar now has topped. As far as the gold market goes, reverse of the dollar market as it reversed to the upside. That big Thursday move opposite the dollar really had gold moving up nicely for the week. And the oil market, wow, 5 down days in a row, down some $3.40 to the downside. This is a very weak showing, and for our people that get our charts with our analysis on there, it's just running way past the time that the normal bottom would be, and that is a very bearish occurrence. It does say that rallies will likely be pretty feeble when they do eventually come, and that is a good sign that the world economies are not really looking in all as good a shape as maybe our payroll numbers are saying. That's it for the opening segment. We'll be right back with the best and worst stocks for the week. All right, best stocks for the week. So our style of analysis is cycle analysis. And if you like the type of analysis that we do, especially on the stock market, and you know our subscribers that get our charts, they're thinkorswim users, which is our preferred broker, and they get our charts and can put them up on their platform. That's our highest level premium membership. However, if you want to get that analysis, we do produce it once a week on a very great special where you can get all of our stocks on the chart on the stock market. That's on the S&P 500, NASDAQ, and the Russell, weekly and daily, plus all of our momentum analysis that we have on there, and a good synopsis of what we see in the markets on all of the time frames. It's just an amazingly comprehensive report. You can have that by just subscribing to the Stock Index Report. Just go to the front page at askSlim.com, and you can click right on that, and you can get that for just $19 a month. Now that price is going to be going up soon, so if you buy it now, you'll be grandfathered in at that price. So it's an unbelievably great report, and anybody who is our other members at other levels, or if you joined at other levels, you're still going to get that report. It's included with all of our levels. So Stock Index Report, I think it's just amazing, and you can go to that page, and on there is a sample of it, and you'll be able to see exactly what you're getting, and a little bit about my history also on there. So go to askSlim.com, Stock Index Report, right on the front page next to the player, and take a look what that is. Also, follow us on Twitter at askSlim, and become a YouTube subscriber, because we do put stuff out on YouTube now and then also. So you can watch this, the beginning part of this show on YouTube. Remember, now to see all of the show, you need to be a level 1 subscriber, and that is free. So the most important thing as we talk about our analysis is that we are cycle analysts. We look at the rhythms in the market, we put that on our charts, and that to us really gives us more market awareness than I think any other type of analysis does. And you're going to see it as we look at this, especially if you're new to what we produce. It's really awesome when you see it, how much you can learn about markets if you learn about cycle analysis. And if you want to know more about cycle analysis, you can just go look up our cycle analysis workshop that's on the website also. All right, enough of the promos. Here you can see our analysis right here. We're going to start out with Under Armour. Under Armour is the best stock for the week, up about 27%. So again, this is our cycle analysis. On the bottom are cycle brackets. On the top are these lines are how the cycles actually resolve themselves. This one you can see has a minor cycle, a smaller one, and also has a bigger cycle. We call it dominant. Here we have the dotted line showing you the minor cycle right over here. This one we have it in showing the dominant cycle, so you can see. So this is a unbelievably powerful pattern that has occurred here. Huge beat on earnings, and I'm going to show you 11 stocks right now on the best of the week. And there are a number of them that are what we consider to be first week rally stocks. That means that when you have the corrective period that you see here with the two cycles pushing to the downside, that brings you the highest potential for declines. When you then turn up, velocity picks up, and you can see the velocity in this massive upside bar right over there on these strong earnings. This is the first week of the rally. First week of this new rising phase with two cycles pushing to the upside. This is unusual to get it that strong, and it is rare that this would ever be a top. The most common thing would be a little bit of a pullback and then surging back up. And you can see in our what we see here is that we are projecting this to go higher and get up, maybe making that measurement right over there, which was the big inverted head and shoulders that we had shown right over there. So there you can see the inverted head and shoulders, the upside projection. It got close, and now we think it's going to get there or higher again. So this is great action when you look at Under Armour. You just watched the opening to the askSlim Market Week show. To watch the complete show, just become an askSlim Level 1 member. It's still no cost to you. It includes my analysis on the best and worst stocks for the week and my projections for the short-term view of the coming week. There's always a chance to learn a lot about special situations, cycle analysis, all kinds of technical analysis, and of course, potential trading opportunities. We have an unbelievable offer here in that you not only get the full askSlim Market Week show, but you get the Market Week archives, which were not available to you unless you were a member before. Plus, you'll get special Level 1 videos that we put in there from our premium library, and sneak peeks to new product launches, and of course, more specials along the way. Become an askSlim.com Level 1 member, no cost to you.
I'm going to the city and I'm gonna do a stage show. And I know all my fans wanna learn how to make some dough. I've been cruising